Good morning, good afternoon, good evening, wherever you are in the world, to this webinar from Reuters and Insurance Nexus on enriching auto insurance product development innovation. Welcome, and also if you're celebrating Christmas, I hope you're looking forward to it, and the new year too. So today, very happy to have along three expert speakers. Firstly, Christopher Frankland, founder of InsurTech360, who will be moderating the session. Also, Aleem Lakhani, an executive vice president at AmTrust, and Harry Storck, director of risk controls at Protective Insurance. And today, really, we're going to sort of deep dive into everybody's experiences around auto product development and innovation, perhaps talk about existing products or product development within auto. How does that sit with customers? What effect does that have on fleets, consumers, commercial insurance, the technology involved, and where all of that is heading in the near future? So I'll pass over to Christopher to introduce the session, and I hope you enjoy it. Please remember, of course, to send lots of questions, and we'll get to those at the second half of the webinar. Chris, over to you.
Graham, thank you so much for that introduction. Good morning, everybody. Good afternoon, depending where you are. It's an absolute pleasure to be back with Reuters events and moderating today's webinar, which I think is going to be a fascinating discussion around auto insurance, product development, and innovation. We are, as Graham mentioned, we are joined by two incredibly knowledgeable people in this space. So thank you, both of you, for joining me today. I think everybody on the phone or on kind of dialed in today is already seeing a lot of change around the auto industry. The increasing kind of movement towards autonomous capabilities within vehicles being rolled out, I think is certainly something that we all agree will continue to really have an impact, not only kind of on the buying habits and behaviors of consumers, but as a result of that, around the insurance business models that have been in place and perhaps haven't really changed all that much for the past 30 or 40 years. So I think as we start to move towards this mobility as a solution type industry and ecosystem, we'll start to kind of see that transition from the traditional ownership of a vehicle towards more of the usage-based type scenario that I think we're starting to witness. I have a couple of statistics that I wanted to put out there before we dive into the conversation. By 2040, 14% of new cars sold will be fully autonomous, according to a report by Credit Suisse. And by fully autonomous, that means level 5 automation, in which humans are nothing but the cargo that essentially tell the car where to take them. As a result of that, I think we'll start to see another statistic: the rise of autonomous vehicles will lead to perhaps 30 to 50% fewer accidents, driving a 40% fall in premiums by 2040. And in addition to that, the balance of personal to commercial premiums will shift from 80% to 20% today to 40 to 60% by 2040. So obviously a lot of impacts there across the industry. Lots of changes coming our way. I think Harry, let's perhaps start with you, and if you can share your thoughts really around how the auto and trucking space may be impacted by some of these movements in the industry.
Yeah, thanks, Chris, and it's a pleasure to be here. Happy holidays to all. I've had the pleasure to participate in a few Insurance Nexus events, now Reuters in the past, and I've always gotten a lot out of it from knowledge as well as awesome networking opportunities. So, at my role at Protective Insurance, I work and really am heavily involved in the technology space, much of which is focused on technology that is available to our clients, things around telematics, video dash cam, collision mitigation solutions, etc. So Protective has been in business for about 85 years. I am a relative newcomer with Protective. Prior to Protective, I worked at AIG and led their commercial auto risk consulting practice. So whether it's AIG, Protective, or anyone else in the commercial auto space, and in particular in the commercial trucking space, that's where Protective has most of their legacy history and their growth going forward. The real question is, why are these new products needing to be developed? And the first step is that today, collectively in the industry, the combined ratio of all commercial auto carriers is underwater. Trucking is even at a higher level. According to AM Best, 2018 combined ratios in commercial auto was at about 110%. So when you have a profitability challenge, new products can help to improve that. The other real important area is, well, these new products, whether they be insurance products or vehicle technology solutions, what kind of a need are they really fulfilling? And, the ultimate goal is around road safety, driver safety. We play in the United States space. So, approximately 35,000 people are killed each year in vehicle crashes. And, that's kind of the pie in the sky that we have to always be looking to help, is to save lives and do that in a commercial sense that, is as practical and efficient as possible. So, how are customers using technology and using possibly new insurance products? Today, my opinion is in the commercial space, that UBI approach, usage-based insurance, is really kind of on the drawing board. There are a few companies that have, moved towards trying to do a UBI platform, but UBI today, at least in my opinion, is much more prevalent in the consumer space. So my comments are really more focused on commercial and commercial trucking. So, with recent changes in the landscape around technology, most recently the new electronic logging device mandate in the United States, commercial fleet operators in the trucking space, they've been mandated by law to move into a technology arena where previously they were able to get away with paper logs. The final federal mandate went in effect December 16th, this past Monday. So no more grandfathering or extensions or anything else. Everyone must use some form of technology in their vehicle. And in addition to the ELD mandate, many other more forward-thinking companies, either recently or years ago, had already moved into vehicle telematics and video dash cams. So the key for an insurance carrier is to make sure our clients are taking full advantage of whatever solutions they've invested in by working with them with our loss prevention teams, having underwriting and actuary understand what data is available and to use that data fairly and accurately. But today, the amount of data sharing on vehicle and driver behavior from a safety standpoint is really not as prevalent as we see it will become. Years ago, when companies adopted some of these technologies, they had to get over that employee concern of the employer was Big Brother, and maybe the employee wasn't comfortable with a supervisor boss knowing everything about what they did in that vehicle. You could kind of make the same argument that today the potential new Big Brother is the insurance carrier, or now the fleet operation, the insured might be a little bit concerned about sharing that data with their carrier for fear that it would have a negative impact on their rate structure. The point is, it's a hard market in commercial auto. Everyone's rates are going up. So there's a high degree of education needed in the market. There's maybe a misconception that if I adopt a technology, it will automatically make my premium go down. And today in commercial trucking, at least, that's just not the case. So, how do we go forward? How do we really maximize the value of this solution as it would directly impact insurance products? It's all about the data. It's all about getting access to accurate data, to normalizing the data, because it can come right now from so many sources. The vast majority of solutions that clients use that would be a potential contributor for a UBI platform, they're all pretty much aftermarket solutions being provided by numerous vendors. And every vendor has kind of a different platform, a different rules logic that they use. So normalizing all that data is a challenge. And I think the big elephant in the room is that the insurance carriers, like Protective and others, are very, very eager to access the data. And to gain access, they need to make sure that they know that there is likely a financial stake that the insurance carrier must contribute to be sort of a quote unquote owner or partial owner of the technology solution, so they would, as an owner, get access to the data. But with combined ratios where they are today, and the typical insurance policy being on a 12-month renewal premium cycle, it's challenging to figure out where do you invest those precious dollars in technology to get data, knowing that that client might not be with you 12 months from now if they choose to shop their rate in a very, very volatile market right now. So those are some of the highlights of things that we're looking at. We're very open to partnerships in the vendor community. We're looking for ways to move beyond just referral vendors to actually stepping up with vendors and being a co-sponsor. But it's all about the ROI and how can we measure the value of these platforms to ensure that these decisions we're contemplating are going to bear fruit. So at a high level, Chris, I think that would kind of be my thoughts on the topic.
Thank you, Harry. Thank you so much. I don't think we won't be doing questions right now, but I do encourage people who are tuning in to please put your questions forward to Harry and Aleem, because Harry, I think you covered quite a large range of information there, all of which I think is going to have quite a large impact on where this industry will be 10 or 20 years from now. And one of those question marks obviously being around data and ownership of data. And I think we see across other lines of business within the insurance industry, life, health, wellness, etc., that data is clearly a thing that's going to drive not only customer behavior going forwards, but will also drive essentially what the insurance industry will look like further on down the road. So Harry, thank you very much. Aleem, I would love to bring you on now to provide your remarks, and And as I said, we can start lining up some questions for the end of the session. So Aleem, over to you.
Fantastic. Thank you so much. And thank you very much for the opportunity to participate in this forum, and happy holidays to everyone. I believe what Harry has said, while focused more on the commercial side, is highly relevant and speaks to a lot of the operational considerations on the consumer side, which is what I will focus on in this discussion today. And so from a consumer side, the intent is from an insurance carrier perspective, to really be transformative on several levels. One is, whereas we have traditionally been absent in engagement with consumers, we recognize that to be successful, to ensure retention of good customers, and particularly with the prevalence of digital technologies now and the demands that consumers are making, it warrants us to have a very different perspective in our role with respect to customer service. It isn't at the time of claim. I think the data shows that on average, a consumer has an engagement with a carrier once every, I believe it is 14 to 16 months. And so it's understandable that there is a high level of attrition or defection when there's minimal contact. And so the question becomes, how do we deliver more value? Telematics in the automotive and insurance industry certainly provides that opportunity in terms of engagement to be able to ensure improved brand recognition, deliver more value and content, and ultimately deliver relevant content to be able to affect consumer driving behavior so that we can manage the appropriate risk associated with that and deliver more value in terms of price commensurate with the risk of that individual by virtue of having that data. So I agree with what Harry has said, and really at the core of all of this is the ability to derive meaningful data and be able to make good use of that data in a timely manner, both internally and externally. So from an internal perspective, obviously having that data allows us to be able to manage the risk portfolio much more effectively so that we can, either from a selection process or from a management perspective in terms of ensuring selective lapsing of certain kinds of policies, manage that risk much more effectively. Secondly, the data allows us to be able to engage the consumer to affect change in their behavior. And then finally, all the operational efficiencies such as predictive analytics and other data science techniques to improve the overall portfolio management, but also engagement strategies. Telematics is also, for that matter, particularly in the United States, given the fact that it has moved away from using dongles to primarily smartphone devices to support telematic solutions, it's also become a means by which we can do this much more quickly and cost effectively. So those are some of the benefits that we see from the consumer side. The consumer is looking, given the competition in price, obviously looking for the ability to derive risk that commensurates with their profile. The interesting thing is the data shows very clearly, not surprisingly, that most individuals perceive their driving habits as better than the reality. And so there is belief, as even Harry had spoken to, that the expectation is that we're going to derive lower premium rates as a result of it. But the actual reality is that not all are good drivers as much as they may think it is, and so the rates reflect that portfolio and allows us to manage accordingly. But the transparency that is provided to the end user is part of the most important part of this, in that that sort of delta between actual and perceived, it's an opportunity for us to educate the consumer, to be able to identify in which ways those differences are relevant and how to affect their behavior so that they can continue to make improvements so that they derive the economic rewards. To achieve that, the areas that we've been focused on and we're looking at is, one is the establishment of micro rewards. So rather than passive engagement with them, and that means providing content, the utilization of gaming technologies, as well as the use of micro rewards, so that small incentives like Starbucks coffee or anything like that will be a motivator. And what from the data that we've seen, the impact can be as great as about 6% on the loss ratio. So we recognize that there is inherent value in being able to engage with the consumer in a meaningful way over a particular moment in time and affect relevant behavior. And so again, using data to selectively identify those, or in general, all in a particular geography, and particularly given the fact that we can use technologies now related to the surface itself. So geospatial and traffic and other variables that are salient in the outcome or probability of adverse outcome, we can actually ensure that those campaigns are run much more narrowly to ensure effective change that can really be significantly positive to both the end user and the carrier in that regard. So micro rewards is a big area of focus to ensure that we can have direct and immediate impact where it is necessary. The second area is with respect to the recognition that the boundaries between connected car, connected health, and connected home are becoming increasingly permeable. And so given our expertise in these categories, what we are working on is how do we create and leverage this continuum of connectivity to develop programs that are beyond just the vehicle, and how do we interlay all of these different areas together to provide a much stronger value proposition because of that interconnectivity. We certainly are seeing for example, with health, the ability to monitor in the vehicle and change certain kinds of disposition, but the same thing, particularly in the home environment as well, where we can draw a much more encompassing a series of products that can cover risk in both domains. The third area that we're focusing on, and which is one of our primary categories in which I am associated with in specialty risk, which is with respect to vehicle services contracts. The vehicle services contract is challenged in certain ways. The question becomes, you have to have the ability to extract data regarding the performance of the vehicle. So notwithstanding how the consumer may manage it, it's really about being able to derive engine behavior. And if you can obtain that from the OEM because you partner with the OEM, or now because there's a growth in data intermediaries that are aggregating this data and can create a more viable both business and operational model for us to be able to connect to end users and be able to get that kind of meaningful data. Or third, using primarily dongles to be able to get that information, to be able to actually look at those variables in the engine to determine vehicle reliability and then engage in preventative maintenance and other predictive capabilities so that we can mitigate losses associated with that. So, and those, particularly the last, which is what has been the most prevalent in our industry, and relatively few are doing that, has been to use dongles. But the cost can become quite prohibitive. And so where we have focused, or an area that I have been focusing on, to drop the costs and derive the benefits of that data, is to look at how we can use consumer driving behavior, which is available through their existing app or through the technologies that they're using in the vehicle, and use that as a surrogate along with other technologies like geospatial, so that we can understand traffic patterns and other landscape behavior that might affect the performance of the vehicle by virtue of not only how they drive, where they drive, and when they drive, and interlay all of these things to develop a reliable, predictive model that can improve how we engage with the end user. So now, if you look at it in the vehicle services industry, everyone drives differently. And so we don't know when you have to engage in particular kinds of maintenance behavior. We can use general aggregated level data to make that prediction. But now what we can do is by deriving this personal level data, we can actually use that as a surrogate measure with this other data set to be able to now engage with them so we can be proactive. We can deliver micro rewards into the system so that they can maintain their vehicle and we can improve their reliability. The other thing is that now we can endeavor to, by virtue of the smart device that they're employing in their vehicle, we can also extract the ability to understand the mileage that they're using. And so whereas our contracts have been predicated primarily on time or mileage, the absence of any claim or interaction with that end user means that we don't have visibility to the mileage. We only have visibility to time. So now that we will have visibility into mileage, what it does is it allows us to calibrate our true risk. And so we can improve in terms of our ability to know when a contract expires and earn. And so our profitability can change quite significantly on that level. So those are the three areas in which, I'm particularly engaged in. But overall, what we see is obviously between where we are today and to the point of autonomous vehicles, such as the data that was just quoted, like in 2040, there's a tremendous runway of opportunities to leverage existing technologies to continuously improve our engagement with consumers, ability to modify consumer behavior through awareness and information so that they conduct themselves in a manner that reduces their risks or improves their risks so that they can derive the economic rewards. And then finally is to leverage this data so that we can develop, other innovative products and services that are much more calibrated to the individual than they are in an aggregate. And finally is how does that data become relevant in a broader connectivity environment so that what we can do is interconnect with all of these domains of life and be able to deliver more holistic, relevant experiences for that consumer. And by virtue of being able to do that, we can actually not only design appropriate risk models, but we can now have a schema that can look at how we develop premiums that are, for the lack of, not necessarily cross-subsidizing, but in ways in which we can determine the profitability of that product or around the consumer and a multiplicity of products much better. I'll turn it over to you now.
Aleem, thank you so much. I think the conversation around the consumer behavior, looking at capabilities like gamification, looking at the ability to encourage or incentivize the insured is so critical. I recently read, I think it was from the National Safety Council report that stated that cell phone use whilst driving actually leads to about 1.6 million crashes each year. And I believe 1 out of every 4 accidents in the United States is caused by texting and driving. So obviously, from a safety point of view, I think the way that people engage with their phones, with technology, is changing, and it's changing quickly. And I think that within the auto space, anything that can be done to incentivize, to encourage, to really move people away from this sort of onslaught of distracted driving, I think is commendable. I did just want to kind of talk really quickly about an experience that I had in Vegas, Las Vegas, about a year ago. Lyft had at that point launched a self-driving program with Aptiv. And this was in 2018. So I think I was kind of one of the first to actually try the self-driving autonomous service with Lyft, and it was game changing. I often, when I talk about automation and kind of creating this concept of the seamless customer experience, I've often talked in the past about Amazon Go, and how Amazon in the retail space have created this model where it's really kind of creating a touchless, seamless customer experience. If anybody has the opportunity to try a Lyft ride with the active autonomous vehicle, I encourage it, because it's fascinating to see how this space is going to change, and I think we have this evolutionary course of action where I believe I agree that there's a huge runway where before we get to that fully autonomous state. But in terms of where customer behavior is headed, I think that people increasingly are looking for solutions that are seamless in nature. Let's get to some questions. We do have a handful of questions lined up from people, folks who have called in, and I do again encourage you to put your questions forward to Harry and Aleem. Aleem, let's put this one to you first of all, from Julie. What are the main differences and benefits of collision avoidance systems versus telematics?
I do believe that the one primary thing is related to latency. So the collision avoidance systems are really designed around creating an appropriate halo and that will be particularly relevant when we get to the autonomous vehicles, to ensure appropriate driving behavior at that in a real-time fashion. I think telematics, the opportunity for us with respect to telematics is the ability to garner deeper level information so that we can then apply that. So I do believe that as time progresses and technology improves, and when computing at the edge will become more relevant, that is, and particularly as embedded sensors become integrated into our infrastructure, I believe at that time the delta between collision avoidance and telematics will be significantly narrowed. But in the absence of that today, I think that the primary difference is in terms of what is the primary scope of these two. Second is the ability to use different kinds of data for different intended purposes, and where time is not necessarily the most critical, particularly with respect to telematic data, where we can employ the data with a certain degree of time differential. That's where I think the differentiation becomes particularly important. So the utility of crash avoidance systems in existing or in new vehicles is critical as an interim, but I do believe that as time will progress, there'll be a narrowing of the field as we have more data available through a multiplicity of sources, not just the vehicle, exclusive vehicle itself, but a multiplicity of other characters.
Yeah, Chris, I'd like to add maybe a commercial viewpoint on that.
Sure.
So, there's a very, very simple fundamental difference between collision avoidance and telematics. Collision avoidance is a proactive tool that takes action. It identifies a hazard and it hopefully mitigates the hazard from resulting in a crash, or if there is a crash, it lessens the severity of a crash. So that is an active solution. Telematics, video dash cams, solutions of that nature are a passive solution from a safety standpoint. All they are doing is identifying that an event has already happened. And it is then the responsibility of a frontline safety supervisor, again, this is in a commercial sense, that once that event has been captured, there must be follow-up action to correct that event, either through driver coaching, discipline, or training. Because if all you're doing is stockpiling a inventory of events and you're not taking action, all you're doing is stockpiling evidence for a plaintiff attorney to come in and sue you, possibly as being negligent or grossly negligent, that you had all these events of speeding and other sensor behavior, but you can't prove to a jury that you actually did something with it. So the key thing that everyone needs to be aware of, at least in the commercial sense, is that knowledge that the events are happening does not change behavior. To Aleem's point, there must be consequences, good or bad. So the good consequences could be in the form of gamification or driver rewards, etc. But if nothing is done to act upon in a timely way what information is being collected by these sensors in the telematics world with dongles and dash cams, it's really a waste of your investment, because all you're doing is making it easier to be sued.
Oh, thank you for that clarification, insight, Harry. And I think in the trucking space, I mean, I would actually be interested to hear, Harry, from you as well, other measures that perhaps are being introduced to help prevent accidents, or to I think within the insurance space in general, we're sort of seeing this shift and trend towards preventative as opposed to reactive kind of care and discipline. And in the trucking space, I think what comes to mind would be driver fatigue, distraction, that sort of thing. So a question for myself. I mean, what sort of kind of solutions do you see really becoming prevalent over the next 5 years? And perhaps where are there opportunities to still create solutions to help improve that space?
Yep. So that's an excellent question, because it really is all about, whatever, all of these solutions are excellent, but they all have a different level of user or manager role in a commercial environment. And if everybody doesn't do their job, so to speak, the results are not what they were hoped to be when you go through a very compelling product demo, as an example. So another thing in the trucking space, before I fully answer the question, would be, again, through an educational point of view, many look at trucking and they think of these huge fleets out there of national carriers with thousands of trucks, whether they be private fleets or for hire fleets, but that's really not representative of the truck marketplace in the U.S. In the U.S., according to the American Truck Association, approximately 95% of all registered trucking companies with a DOT number have 20 vehicles or less. 91% have 6 vehicles or less. So the marketplace in U.S. trucking is much more prevalent with mom and pop operators, many dependent upon independent contractors versus employees. So that's just yet another part of the story. So, but to your point, fatigue management is something that we are looking at right now. There's some very interesting vendors that have solutions out there to address risk associated with fatigue, whether it be some type of a Fitbit, type of a style device, or even integration through a vehicle's electronic logging that tracks a vehicle's hour and a driver's hours of service. Other solutions in the collision mitigation that are more OEM installed on the assembly line are becoming much, much more prevalent. So over time, I think there will likely be a shift from the aftermarket solution type of a sales environment that we're in today, mostly over to more OEM installed applications. But that will take time to get there, because if you're an individual owner operator with 2 vehicles and you're fighting the emission standards and other things to be in business, you're going to get that vehicle and hold on to it for 8 to 10 years. So the vehicle replacement cycle to going to new vehicles that would likely offer more OEM installed options, again, that's kind of way down the road in the reality of U.S. trucking. We're going to get there eventually, but that's not something that we see in an autonomous way that is going to be happening in the very near future.
Harry, thank you so much. And actually, here's a follow-on question that if you'd like to add your comments, and then Aleem, we'll get to you. But so we have a question from Tony Frangiosa, and his question is around: are there more vehicles using OBD dongles than smartphones on the road today as part of UBI? And is the information and accuracy greater when using OBD devices? And are there any metrics right now available around OBD versus smartphone apps? And Harry, I think to your point about OEM kind of parts being embedded within the vehicle, perhaps if there's a movement towards more smartphone-enabled applications, that might help to alleviate some of that.
Yeah, so an excellent question. So historically, the product development over the years has been a dongle or even a hardwire install moving towards a dongle with the OBD2 portal for light duty or heavy duty assets, and then ultimately now the smartphone applications. So in the commercial space, especially in trucking, the dongle or the hardwire applications are most prevalent. Due to the low cost of the smart app solutions, many are looking, or insurance carriers are looking at offering a smart app solution that could be layered on top of any existing platform that would be a dongle or others similar to that. So the insurance carrier, through their provided application possibly, or co-funded application, would at least get access from what is available on the smartphone. When you get into questions about which one is more accurate or which one gives you more, the smartphone device gives you information that is comparable to what you're able to use today on your phone. You can do GPS, you can do directions, you can push messages. You have sensor and gyroscope accelerometer tools that help measure G-force data, but those applications are not doing anything to address vehicle maintenance, fuel consumption, idle time, things that are more connected directly to the vehicle computer. So it's really a use case around what is it that your company is trying to solve for, and then choose the application that makes the most sense for that.
Thank you, Harry. Thank you. Aleem, any thoughts and comments around that?
Sure, absolutely. So, Harry, spot on with your observation. And the consumer market, however, in the United States is towards smartphone utility, whereas in the European and other markets, it is much more of a dongle. So there's really a differentiation between the North American market relative to the rest of the world. Secondly is what is more reliable in terms of data, as Harry had articulated well, is I think the smartphone device is limited, rich but limited, whereas the dongle allows you to extract a lot of information extremely reliably. So there's a tremendous amount of data, and it's a question of what your purpose is and being able to, pull the lever on enabling that particular data point to be able to facilitate the kind of information you need to be able to make appropriate decisions with respect to that. So from a reliability perspective and the potential scope, it's significantly greater in the telematics. Among the challenges, for example, is that if you have multiple users of a vehicle, the dongle can't differentiate between that. So the smartphone becomes much more relevant because we can identify it to an individual whereas you can't do that with respect to a dongle. So there are relative pros and cons, but the cost has been the major factor in the consumer market, leading to the use of smartphone technologies in lieu of dongles in the U.S. market.
Thank you, Aleem. Excellent comments. So look, we've talked a lot about data, and really data being a critical component of this journey around the move towards more autonomous behavior. A question from Ty Clark. Can you comment on the impact of CCPA and GDPR on data sharing and telematics, and whether you think this will hinder innovation? Harry, feel free to take that one first.
Yeah, so today with regard to data access, the big concerns are around data privacy, what data is being collected, and how is it being used. And so insurance companies are starving for data. In the commercial space, there are some trends emerging that were kicked off earlier in the discussion around data warehouses or data exchange, third parties that have developed solutions to aggregate data from multiple sources and provide that data in a neat, tidy bundle to someone that would be interested in buying it. So that's kind of one approach. With client consent, which is critical, the client typically consents in two ways. Number one, they would consent to be involved in the data exchange or the clearinghouse, sometimes they're called. So number one, just get my data included in with other people that have also consented. And that gives the client in their own ecosystem, without the insurance carrier's involvement, the ability to benchmark themselves against others that might be similar to them. If they were to provide a secondary level of consent to make that information available to the insurance market, then the insurance marketplace has the opportunity to, for a fee, to get that data from one source that's been normalized. The theory behind that is excellent. There's a very exciting progress being made in that regard, but there's still, like everything in this topic, it's not perfect yet. It's all garbage in, garbage out. So an example would be one telematics provider, won't name names, but a very big one in the marketplace. They don't sell their solution directly. They use a network of resellers. And so the method at which your telematics platform for your business would be set up and initiated would really be a function of how it is explained to you by that particular reseller. So if your focus is on speeding and fuel consumption and harsh braking, and that data is captured for those topics, a different reseller of the exact same product might have a different way that they would recommend that you address those topics, or even have different topics altogether. And so the data that eventually would come to the insurance carrier is still not 100% normalized, because it is a function of how the rules logic was established. So it might be a wordy answer, but those opportunities for accessing data, number one, is the insurance company in a commercial vehicle realm needs to acknowledge that at some point they need to make a financial contribution versus just saying, pretty please, may I have your data? Because at least till today, not many private fleets are making that data available to their insurance carrier in a commercial setting.
Thank you, Harry. Aleem, any thoughts?
Yeah, without repeating what Harry has said, yes, I agree. I think I'll just add 2 points. One is the trajectory towards the user owning their data and the ability to manage that data in terms of who they provide it to, and in terms of what consideration may open up the fact that they will share more, providing they can receive a quantifiable benefit associated with that, a willingness to share. So I think ultimately it's about the ability for the user to determine what they do and the portability of that data. Number two, I think as in addition to privacy, the other part of this equation is with respect to the security, because there's much that we know is happening with respect to breach of the data, especially if there are multiplicity of providers or players in the industry. Each of those, have their own particular protocols and therefore may open up to risk. That's why I think one of the critical evolutions in this area is with respect to blockchain technology in the telematics world as well, that I think will help to mitigate quite a bit of the risk. It'll help to mitigate a lot of the fraud, and will provide for immutable data that will allow us to be able to leverage much more reliably for the purposes that we intend to do.
Thanks, Aleem.
That's the last thing that I've.
Go ahead, Harry.
If I could, pardon me, I've just had one last thing quickly. Data security, data access through privacy permissions are key. And the third one that can never be ignored is data accuracy. And I've seen it myself that depending on how devices are installed, if they are a more of a dongle approach, anything associated with an accelerometer, if that device is not installed 100% correctly, then there are rampant false positive opportunities. So just because you're getting the data, you need to have a strong level of comfort that it's accurate before you're using it.
No, that's a great point, Harry. And I think again, really across the insurance industry, data accuracy, data cleanliness, it's a critical component. And Aleem, I think your comment about blockchain, I agree. And I think we could have a follow-up webinar around that alone. But the ability to trace and kind of have this high visibility and trust around data, I think is critical. And another question, which I think follows on nicely from the one that we just had. So from an underwriting lens, those policyholders who have adopted the new best practices on real-time continuous MVR versus kind of the old practice of the annual MVR checks. How are your companies kind of differentiating between the two? And how do you see that evolving going forwards?
Well, in a commercial sense, the ability to get that vehicle or MVR monitoring now is, compared to what it was a few years ago, is pretty much nationwide. Early on, there was not that connectivity within each jurisdiction to get that data. Some would provide it weekly, others monthly, others not at all. So our clients, we see, are moving aggressively towards that platform. It goes beyond what is required by law in the trucking space to have an annual MVR, to really keep an eye on compliance real time or much more frequent than once a year, twice a year is very, very powerful, and it's used, in commercial insurance as the marketplace continues to adopt those types of, more frequent and real-time data, data points that are now available.
Thanks, Harry. Aleem, any thoughts?
Yeah. I mean, I think in the consumer area, I think that there are opportunities to be able to leverage a lot of the rich data that we can get on vehicle driving behavior to support, policy goals, compliancy requirements, and other administrative requirements. And so, for example, I look at in Canada, in Ontario, for example, where they had with the Conservative government, removing emissions testing as a requirement for your license renewal, either on a yearly or every 2-year cycle. Data such as that can ensure the quantification of emissions, but also in terms of compliancy requirements. Automotive registration. Many vehicles that are out there on the streets that don't have suitable registrations can be another methodology, use of telematics. And then from a broader policy perspective, and I think in Europe, there's been a significantly greater effort in that regard, and that is, to reduce carbon footprints. How they use vehicle data to be able to achieve certain timelines and milestones associated with that become increasingly important. So I think the ability to use data on a multiplicity of level, connected car is maybe perceived as more proximate to the smart city model than it is to, say, a smart home, as an example, that I think those interconnectivities are going to make for the ability to be able to extract meaningful data as more relevant than just for the purposes of use for insurance perspective, but for other broader societal needs. And so therefore, from a user perspective, I mean, it's interesting, as I read literature in a lot of academic literature and other, the tendency is that when we look at these smart technologies, the people that are defining the narrative are the developers, the technologists. The narrative is not strong as it relates to the user. We know what the user value proposition is, but it's not advocated from the user itself. It's through this proxy that we hear. And I think that these technologies, in one framework, from a socio-technology or technical perspective, is the fact that we are in an evolution of change with respect to digital transformation. And what we are endeavoring to do today is at one point in time, given what we can see with respect to the technology. But I think that the trajectory in terms of the meaningfulness of this in a broader societal level, personal and collective, is much more dynamic, much more intertwined, and much more macroscopic in scope. That I think that as these linkages get drawn more profoundly and more visibly and more quantifiably, we'll start recognizing that it's going to be very reciprocal. So compliancy and regulatory requirements are going to impact the individual, and now we have the ability to measure it, right? And so we can measure it on a singular level as opposed to an aggregate level and impose general policy. And so I think that we are going to see even more profound change over the years ahead.
Aleem, thank you so much, and I think that's actually a tremendous way to wrap up the Q&A. And thank you everybody for your questions. If anybody would like to reach out to me, Chris at InsurTech360.com, and you can find me on LinkedIn. Again, gentlemen, thank you so much for your contributions today, and thank you to everybody for tuning in. Happy holidays to all of you. Graham, I think you may have some comments to add just to wrap up the session.
Thanks, Christopher. Yes, and I just echo your thank yous to Aleem and Harry too. That was really insightful. So thank you for your time today, and to all of the listeners that joined us. We will make the recordings available. I would just mention the main event, which is Auto Insurance USA in Chicago next year, April 16th to the 17th. It's looking at the whole auto insurance ecosystem. So the innovation teams, those leading personal and commercial lines, the product, the claims guys, how is technology impacting on all of this? What about OEMs? What are the implications of that? All of the telematics strategy, first notice of loss, the data considerations, claim cycle time compression, etc., etc. Lots on this, and lots of the big US carriers involved. So please do go and have a look on the website, insurancenexus.com/auto. It's the final day for discounted passes. So if you are joining, if your team's coming along, make sure you let us know today. And again, thanks everybody for joining, and we'll see you soon.
Cheers, everyone.
Thank you.